What if I told you the financial system isn't crashing, it's upgrading? But only for the 1% who know how to hack it. Stick around, because by 2026, everything changes. Welcome back to Wealth Architect, the podcast where we don't just manage money, we design your freedom. I'm Dr. Ben, and if you've been following the secrets to wealth like saving 10%, buying index funds, and waiting 40 years, you're playing a retirement lottery designed for employees, not owners. The system isn't broken. It's working exactly as intended, just not for you. Today, as we sit here in early 2026, with the world already feeling the tremors of what experts are calling the Great Reset, we're diving deep into the 2026 Reset Alert, why your money rules are about to break forever. We'll start by unpacking the latest warnings from legends like Ray Dalio on exploding debt bubbles and widening wealth gaps that are fueling political firestorms. Then, we'll loop back through history's brutal resets, not just 2008, but crises going back decades to see the patterns repeating right now. From there, we'll build tension with real-time 2026 predictions, AI wiping out millions of jobs, currencies devaluing faster than you can say inflation, and the AI bubble that's got Wall Street holding its breath. But we won't leave you in the dark. We'll peak with hope through the 1%'s proven strategies, asymmetric investments, tax hacks, and economic moats that turn chaos into opportunity. This isn't another doom and gloom rant. It's your actionable blueprint to not just survive, but thrive in the upgrade. We're building architects here, not followers. If you're ready to redesign your freedom, let's get into it. Alright, let's kick this off by grounding ourselves in the wisdom of one of the sharpest minds in finance, Ray Dalio, the billionaire founder of Bridgewater Associates, the world's largest hedge fund. If anyone's got their finger on the pulse of global cycles, it's him. Dalio's been ringing the alarm bells louder than ever as we enter 2026, warning that we're deep into a debt-death spiral. That's his term for when debtors have to borrow just to pay off old debt, and it snowballs out of control. Just last month, in his reflections on 2025, he highlighted how currency purchasing power is set to be the top political issue this year, with gold outperforming major markets as a hedge against weakening money. But it's not just about debt. Dalio's pointing to a toxic mix, big bubbles in assets like AI stocks, combined with massive wealth gaps that are widening faster than ever. He says this combo is dangerous, linking it directly to political risks where envy clashes with economic instability, potentially splitting societies. Think about it. U.S. sovereign debt has ballooned to nearly $38 trillion as of January 2026. With Treasury Secretary Janet Yellen warning that we're testing a red line, economists have feared for decades fiscal dominance where debt crowds out everything else. Dalio predicts low returns ahead, Fed easing that might not help much, and political instability driving investors to diversify away from U.S. assets. He's even calling AI in its early bubble phase, with affordability becoming a crisis as money's value falls. This isn't abstract theory. It's happening now. Global debt is mushrooming, hitting developing countries hard and forcing cuts in essential services. For you, the everyday architect, this means your savings are eroding. Your investments are at risk from bubbles bursting. And the wealth gap isn't just a statistic. It's why the 1% are pulling further ahead while the rest scramble. But here's your first payoff. Recognizing this cycle is step one to hacking it. Dalio's big cycle view shows economies move through leverage, money printing, and policy responses, and we're at the tipping point where resets happen. Stick with me. We'll turn these warnings into your personal blueprint to really grasp why 2026 feels like ground zero for this reset. We need to loop back through history's harsh teachers. These aren't dusty old stories. They're blueprints of how systems break and rebuild, often leaving the unprepared behind. We all remember the 2008 Great Recession, the housing bubble burst, triggered by subprime mortgages and lax regulations, leading to 9 million jobs lost, 8 million foreclosures, and the deepest downturn since the Great Depression. Lehman Brothers' collapse in September 2008 sparked global panic, with central banks injecting trillions in bailouts. But let's go beyond 2008. Rewind to the 1982 Latin American sovereign debt crisis, where countries like Mexico defaulted after borrowing heavily in the 1970s, only to face skyrocketing interest rates from the U.S. Fed's anti-inflation hike. It led to a lost decade of economic stagnation across the region. Then there's the 1980s savings and loans crisis in the U.S., where deregulation allowed thrifts to gamble on risky real estate, resulting in over 1,000 failures and a $160 billion taxpayer bailout. The 1987 Black Monday stock market crash saw the Dow plunge 22.6% in a single day due to program trading and overvaluation, wiping out $500 billion in value. Fast forward to 1989's junk bond crash, when Michael Milken's high-yield empire collapsed, dragging down savings institutions and exacerbating the S&L mess. And don't forget the 1994 tequila crisis in Mexico, sparked by political instability and a sudden peso devaluation, which rippled through emerging markets. Even earlier, the 1971 Nixon Shock ended the gold standard, devaluing the dollar and resetting global currencies. And the 1929 Wall Street crash led to the Great Depression and the New Deal overhaul. Each time, the common threads: over-leveraged debt, asset bubbles, policy missteps, and wealth redistribution from the masses to the prepared elite who bought low during the panic. In 2008, the 1% snapped up distressed assets while millions lost homes. Today, with echoes of rising rates, eroding trust in money, and AI hype mirroring dot-com bubbles, we're seeing the same setup. The massive value here? History shows resets aren't endings. They're opportunities for those who study the patterns. If you're feeling that pit in your stomach right now, good. That's the tension building. But hold on. We're about to flip it into empowerment. Now let's ratchet up the intensity and zoom into 2026 itself. We're not talking hypotheticals anymore. As of January 2026, the reset is underway. Wall Street's outlooks are mixed. Sturdy global growth at 2.8%. U.S. at 2.6%, fueled by AI investments and fiscal stimulus, but with sticky inflation at 2.4 to 2.9% and a 35% recession risk if AI spending falters. AI isn't just transforming industries. It's set to displace up to 5 million white-collar jobs this year alone, from coding to content creation, as AI-driven goods plummet in price while scarce resources like energy and land skyrocket. Recent grads are already hitting a wall, with AI making entry-level roles obsolete. Add in currency devaluations. The dollar remains overvalued but is depreciating modestly, while global deglobalization, tariffs, and reshuffled supply chains slow growth unless tech saves the day. The Fed might cut rates only once, with fiscal support propping up 2.1% growth, but it's a tightrope. Meanwhile, AI exuberance is driving stock markets up, but fears of a bubble burst are everywhere. Revenues aren't keeping pace with insane investments, potentially shaking the economy. Debt walls loom. $9.2 trillion in U.S. Treasury maturities this year, plus new deficits, could trigger a bear market. AI-driven inflation is the overlooked risk, with stimulus refueling growth but igniting prices. For you? Your job might vanish, your dollar buys less, and traditional portfolios crumble under devaluation and volatility. But amid this storm, the upgrade Dalio talks about is real for those who position early. This is the emotional peak of tension. Feel that urgency? Good, because next comes the wave of hope with strategies to ride it out. All right. We've built the tension now, let's crest the emotional wave with hope and massive value. The 1% strategies to not just weather the 2026 reset, but profit from it. These aren't pie-in-the-sky ideas. They're battle-tested tactics for economic uncertainty. First and foremost, diversification is your fortress. Don't put all your eggs in stocks or U.S. assets spread across equities. Bonds, real estate, commodities like gold, which Dalio loves as a hedge, and alternatives like private equity or crypto for uncorrelated returns. In times like these, aim for 40 to 60% in growth assets, 20 to 30% in defensives like bonds for stability and income, and 10 to 20% in inflation hedges. Use options collars to protect concentrated positions, especially if you're heavy in AI stocks amid bubble risks. Next, tax optimization is a game-changer. Max out Roth conversions to shift assets to tax-free growth. Leverage charitable remainder trusts to defer gains while giving back. Or use 1031 exchanges for real estate to roll over profits tax-free. In uncertain times, tax-efficient investing can add 1 to 2% annual returns net. Don't forget insurance as a risk manager. Life, disability, and umbrella policies shield your wealth from unexpected hits. Estate planning locks it in. Set up revocable living trusts to avoid probate. Use irrevocable life insurance trusts, ILITs, to pass wealth tax-free and review beneficiaries quarterly. Maintain liquidity with 6 to 12 months of expenses in cash or equivalents for opportunities during dips. Focus on quality investments companies with strong balance sheets and moats that thrive in volatility. Asymmetric bets? Hunt undervalued assets post-pullback, like the 1% did after 2008.
Consistent investing via dollar-cost averaging beats timing the market. Entrepreneurship can be a hedge. Start side hustles in AI-resilient fields. Holistic approach. Rebalance portfolios quarterly. Align with your goals and work with advisors for personalized moats. This is your payoff. Tactics that preserve and grow wealth when rules break. Feel that shift from fear to control? That's the emotional wave peaking. We've deconstructed the 2026 reset, from Dalio's debt-death spirals and historical crashes to AI job wipeouts, currency shakes, and the bubbling risks hitting headlines right now, and rebuilt it with the 1%'s unbreakable blueprints: diversification, tax hacks, liquidity, and asymmetric plays that turn upgrades into your freedom. But remember, this is just one blueprint in our ongoing series here at Wealth Architect. If you're tired of the employee lottery and ready to design ownership, hit that subscribe button, turn on notifications, and join our community of architects in the comments below. Share your biggest 2026 worry: AI taking your job? Debt eroding your savings? And I'll blueprint a custom fix in an upcoming episode. We're not followers, we're builders. Let's architect your wealth together. Thanks for tuning in. See you next time on Wealth Architect.